Okay, hello, I'm Mr. Tam. Today I would like to give you some hints on how to prepare the income statement. So you may see that there is a format of income statements. Let's see them one by one. Above the black line, you may see a black line here. Above the black line, we have company name and income statement, and for the year end, blah blah blah, December 2019. This kind of information can be copied from DSE questions. So what you need to do is to copy it from your DSE questions. So don't be afraid. And for the income statement, actually it's divided into two parts. The first part is from sales to gross profit. And actually we call trading account. So we can see in trading account we have sales, that means we show goods to our customer and the amount which received we call sales. And last return invoice, that means the customer returns goods to us because of maybe the product, the goods are broken or they don't need it, so return invoice. And last, the cost of goods sold. And for the cost of goods sold, we have opening inventory. Remember that when the company is opening, that means if the question state the business is just open, we don't have any opening inventory. Opening inventory will be zeroed. And we add purchases, that means the goods we purchase from our suppliers this year or for that accounting year. And last, return hours. Return hours, that means we returns the goods bought from suppliers to the suppliers. Okay, return the goods to the suppliers. And add carried invoice, that means the transportation cost for purchasing goods. And last, inventory loss. When we talk about the chapter of inventory, we have learned inventory loss. And finally, we list the closing inventory. Closing inventory, in some questions, they may provide the amount of closing inventory on the bottom of the questions. Okay, it may not show in the trial balance. Finally, when sales minus cost of goods sold, we can get the gross profit. So after calculating the gross profit, how to calculate the net profit? We add revenues, all revenues account add, and less all expenses account. So for this part, we call profit and loss account. And so that we can get the net profit from adding revenue account and less expenses account. So let's see the questions to show you how to define these questions. Okay, let's move on to the left hand side. Here is a question: the balance of Mr. John business extracted from his account as at 30 April 2003 are as follows. So let's see the question. The question asks us to prepare an income statement. Oops. Income statement and statement of financial positions. for Mr. Zhang business, and we find the opening balance of capital. So to answer these questions well, we should know which account belongs to income statement and which account belongs to statement of financial position. So first you need to classify which account should be income statement, which account should be or SOFP or both. So let's classify it one by one. For the income statement account, you may see sales, return invoice, opening inventory. That is opening inventory as at 1st of May. Purchases, return outwards, carriage invoice, inventory loss. There are no inventory loss in this question, so we neglect it. Closing inventory. Okay, so let's do the trading account first. Okay, we use these informations. So let's do it. Okay, sales, we have 2,500,000. Let's return invoice. Return invoice, we have 5,500. So let's use a calculator to And for the cost of goods sold, we have opening inventory. That is 63,000. And we add purchases. Actually, we should add this first. And then remove. Okay, so let's return invoice. Return invoice. Oh, return outwards. 80,000. And then remove away inventory loss because there are no inventory loss in these questions. So carriage invoice 7,000. And finally, we less closing inventory. That is 48. So we have cost of goods sold 1,184,750, and we put the net sales 1,995,000 minus 1,184,750. We have gross profit 810,250 is the gross profit. So we add revenue account. So let's move on to identify expenses and revenue account. For the revenue account, I will use the same one. Okay, we have commissioned income. And for the expenses account, we have carry awards, rent and rate, bank and salaries, bank interest, stationery. So we record them one by one. Commission income. We have and we carry or I just write it rent. So we can find a net profit that is 692,450. This is the amount of net profit. So I hope you can learn how to prepare income statement from this video.